Ever wish surgery was a little less, well, surgery, like quicker recovery, more precision, less pain? That's the future. Intuitive Surgical is building with their Da Vinci robots. But is it a smart investment? That's our deep dive today. Intuitive Surgical, value stock, or just hype? If this kind of breakdown is your thing, hit that subscribe button so you don't miss future episodes.
What's interesting here is Intuitive Surgical isn't just making robots, they're creating a whole ecosystem for robotic surgery. They've carefully thought out the entire process, from training surgeons to gathering data to prove its effectiveness.
Okay, so let's unpack their business model. We've got research reports, financial statements, all the good stuff. Where do we even start?
Well, the heart of it is the Da Vinci Surgical System. It's not like those sci-fi robots operating on their own. Think of it as a high-tech extension of the surgeon's hands, allowing them to perform incredibly complex procedures with more control and accuracy.
So it's more like a superpowered surgeon than a robot takeover. Got it. But how does Intuitive Surgical actually make money?
That's where the razor and blades model comes in. The Da Vinci system itself is the expensive razor. We're talking $500,000 to $12 million per system.
That's a hefty price tag. So hospitals are making a major investment up front.
They are, but that initial purchase isn't where Intuitive Surgical makes most of its money. Think of it like a printer. You buy the printer, the Da Vinci system, but then you constantly need to buy ink cartridges, the surgical instruments and accessories. Those instruments have a limited lifespan and need to be replaced regularly, creating a continuous stream of revenue for Intuitive Surgical.
Ah, the classic recurring revenue model. It can be frustrating for the consumer, but is definitely profitable for the company. And speaking of profits, Intuitive Surgical's financials are seriously impressive. They're bringing in billions of dollars in revenue with high profit margins and low debt.
Over 67% profit margin, which is remarkable for any industry, let alone healthcare. And their low debt-to-equity ratio indicates they're not overly reliant on borrowing, which gives them more financial flexibility.
So financially, they seem to be in excellent shape. But let's talk about the people calling the shots. What's the story with Intuitive Surgical's management team?
Gary Guthart, the CEO, has been at the helm since 2010. That's over 15 years of leading the company, which is a good sign of stability and experience. And under his guidance, they've thrived.
Stability at the top is definitely reassuring for investors. But what about their actual decisions? Are they making smart moves?
They've got a solid track record of ethical practices and smart capital allocation. That means they're making responsible choices about how they use their money. Reinvesting in research and development, buying back shares to increase shareholder value, things like that.
Sounds like they're playing the long game, focusing on sustainable growth rather than short-term gains.
Exactly. Though it's worth noting that they don't currently pay dividends. Whether they'll change that strategy in the future is something to watch.
Interesting. Makes you wonder what their plans are for the future. And speaking of future plans, if you had to pick a company for us to deep dive into next, which would it be? Head over to our YouTube channel, Stock Analytics, and let us know your picks in the comments. We love getting recommendations from our viewers.
It's always fascinating to see what companies pique people's interest.
All right, back to Intuitive Surgical. We've talked about their business model and their financials. But what about their management's approach to the challenges and risks in the robotic surgery market?
They're definitely not shying away from the challenges. For instance, one limitation of robotic surgery right now is the lack of haptic feedback, that sense of touch surgeons rely on. Intuitive Surgical is actively researching and developing ways to improve this, aiming to give surgeons that crucial tactile feedback through the robotic system.
Wow. So they're working towards creating a system that's truly an extension of the surgeon's hand, replicating even the subtlest sensations. But what about the learning curve for surgeons? Operating these robots must require specialized training.
Absolutely.
Yeah.
Intuitive Surgical recognizes that. They're investing heavily in training programs for surgeons, creating a whole ecosystem of support. They want to make sure surgeons using these million-dollar systems are well prepared and confident.
It's like a high-tech surgical academy. You can't just hand someone a complex robot and expect them to figure it out. Speaking of cost, hospitals are shelling out a lot of money for these systems. How is Intuitive Surgical addressing the cost-effectiveness concerns?
They're focusing on proving the value proposition. They're gathering data to show that robotic-assisted surgery can lead to shorter hospital stays, fewer complications, and ultimately lower overall costs for hospitals.
So it's about demonstrating that while the initial investment is significant, the long-term benefits outweigh the costs. But what about the most important factor? Patient outcomes. How are they proving that robotic surgery is truly better?
They're taking that very seriously. Intuitive Surgical is conducting rigorous studies and collecting data to show that this technology isn't just fancy and futuristic, it's actually leading to better patient outcomes.
That's crucial. It's about demonstrating real, measurable improvements in people's health. But shifting gears a bit, we've talked about management. Now let's look at ownership. Who are the key players holding a stake in Intuitive Surgical?
A significant portion of Intuitive Surgical is owned by institutional investors. Those big investment firms like Vanguard and BlackRock, these are the heavy hitters in the market. And their investment in Intuitive Surgical signals their confidence in the company's long-term potential.
So we're talking about the big players with vast resources doing their due diligence and making calculated bets on the company. But what about insider ownership? Do the people actually running the company have a significant stake in it?
It's moderate, not as high as some companies, but not insignificant either. It shows that executives and board members have some skin in the game, meaning their personal financial interests are aligned with the company's success.
That's a good sign. You want to see that the people making decisions are also invested in the outcomes. But it's not just about the quantity of insider ownership. It's also about the quality. Are they making decisions that benefit all shareholders,
Right.
not just themselves?
Right. And from what we've seen, Intuitive Surgical's management has a history of responsible decision-making and ethical behavior. They focused on growing the business, investing in innovation, and delivering value to all shareholders.
That's reassuring. It suggests a sense of alignment between management and investors, which is crucial for long-term success. But let's face it, no investment is without risk. What are the potential pitfalls that investors should be aware of when considering Intuitive Surgical?
Well, the first thing that comes to mind is competition. Intuitive Surgical might be the leader in robotic-assisted surgery right now,
Yeah.
but they're not the only player in the game. Other medical device companies, big names like Medtronic and Johnson & Johnson, are developing their own robotic surgery systems.
So it's a surgical showdown. With these companies vying for market share, how can Intuitive Surgical maintain its edge in this competitive landscape?
They need to keep innovating and stay ahead of the curve. They need to constantly push the boundaries of technology, developing systems that offer clear advantages to surgeons and hospitals over what the competition offers.
It's a constant race for innovation in this rapidly evolving field. But competition isn't the only risk. What other potential threats should investors consider?
Another concern is litigation. Medical device companies are often targets for lawsuits, and Intuitive Surgical has had its share of legal battles in the past. Any new lawsuits, or even the reemergence of past claims, could impact their profitability and reputation.
So the legal landscape is something investors need to keep an eye on. But beyond competition and litigation, are there any other risks that could impact Intuitive Surgical's success?
Absolutely. Market risks are a big factor. These are external forces that the company can't control, like economic downturns or changes in healthcare policies. Hospitals might delay investments in expensive equipment during tough economic times, and shifts in healthcare regulations could affect reimbursement rates or create new hurdles for Intuitive Surgical.
It's a reminder that even the most innovative companies aren't immune to broader economic and political forces.
Yeah.
But let's flip the script and talk about what could go right. We've discussed the risks, but what about the potential rewards? Does Intuitive Surgical have what it takes to be a Warren Buffett-style value investment?
That's the big question, isn't it? Let's see how they measure up against Buffett's investment principles. First, long-term prospects. The future of robotic surgery looks bright, with the market expected to grow significantly in the coming years due to factors like an aging population and advancements in technology. Intuitive Surgical, as the market leader, is well-positioned to benefit from this growth.
So checkmark number 1 for long-term prospects. But Buffett also looks for companies with a business model that's easy to understand. Does Intuitive Surgical pass that test?
I'd say so. Their core business is pretty straightforward: develop, manufacture, and sell robotic surgery systems, along with the necessary instruments and services. The razor and blades model, as we discussed earlier, is a classic and easy to grasp. While the technology itself is complex, the business model is relatively simple.
So another check mark for Intuitive Surgical. They're 2 for 2 so far. Now, let's move on to a crucial criterion for any Buffett investment: strong financials. How does Intuitive Surgical fare in this department?
Their financials are outstanding. They've consistently delivered impressive revenue growth, boast high profit margins, and maintain a healthy balance sheet. They're generating significant cash flow. giving them the resources to invest in future growth and potentially reward shareholders down the line.
So they're hitting all the right notes financially, 3 check marks down, 1 to go. But perhaps the most important factor for Buffett is ethical and capable management. Does Intuitive Surgical's leadership team meet his high standards?
From what we've gathered, their management appears to be both ethical and competent. They've demonstrated a commitment to responsible business practices, transparency with investors, and generating shareholder value. They've also proven their ability to make strategic decisions and navigate complex situations.
That's encouraging. It seems like they've got the Buffett seal of approval when it comes to management quality.
Yeah.
4 check marks, no red flags. Does this mean Intuitive Surgical is a guaranteed Warren Buffett pick?
Well, it definitely aligns with many of his core principles. But Buffett is known for his patience and selectivity. He doesn't jump into investments lightly. He waits for the right opportunity, even if it takes years.
He's the master of the long game. He's looking for companies that he can hold for decades, not quick flips for a quick profit.
Right. And while Intuitive Surgical seems to have many of the qualities that Buffett looks for, there's one final piece of the puzzle that he would undoubtedly consider: valuation. Is the stock trading at a price that represents a good value?
The eternal question for any value investor. Is the price right? We've seen that Intuitive Surgical has a lot going for it. A strong market position, impressive financials, a promising future. But all of that is meaningless if the stock is overpriced.
That's where the real analysis comes in. Buffett is famous for saying it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He understands that even the best companies can be bad investments if you overpay for them.
So how do we determine if Intuitive Surgical is trading at a fair price? What metrics can we use to assess its valuation?
As of September 30, 2024, Intuitive Surgical had a price-to-earnings ratio of 88.02. That's significantly higher than the average PE ratio for the S&P 500, which is around 20. But remember, PE ratios are relative, meaning they need to be compared to industry peers and the company's own historical valuations.
So a high PE ratio doesn't necessarily mean the stock is overvalued. It could simply reflect the market's confidence in the company's future growth potential.
Exactly. Investors are willing to pay a premium for companies operating in high-growth industries with dominant market positions and a track record of innovation, which describes Intuitive Surgical.
This is just the starting point.
Yeah, we've given you the broad strokes, but the real work comes from digging into the details yourself, examining those financial statements, and really understanding the risks.
Exactly. You got to do your own research and come to your own conclusions.
And don't forget to subscribe to The Deep Dive for more deep dives into fascinating companies and investing strategies.
We've got a whole library of episodes waiting for you, covering a wide range of industries and investment approaches.
We're constantly adding new episodes, so hit that subscribe button and join us on this journey of discovery.
And remember, before making any investment decisions, always do your own research, consult with a financial advisor, and consider your own risk tolerance and investment goals.